Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Peru's miners are revving up stalled operations with mass testing, isolation periods and revamped shift patterns, setting up the world's number 2 copper producer to hit 80% of production capacity by the end of June, industry officials said. The restart is key to Peru's economic engine and metals output, which was devastated by the coronavirus pandemic and a nationwide lockdown. But unions for mine workers have voiced concerns that some planned shifts are too long while testing and protective measures need to be strengthened. The mining and hydrocarbons industry, the top driver of Peru's exports, fell over 40% in April, with output of copper, gold, zinc and silver down sharply. Companies are scrambling to avoid falling further behind larger neighboring producer Chile, which has maintained production through the pandemic.
Moving on to the top news in the energy sector.
US and Canadian energy firms cut the number of oil and natural gas rigs operating to a record low even as higher oil prices prompt some producers to start drilling again. The US oil and gas rig count, an early indicator of future output, fell to a record low for a seventh week in a row, dropping by 13 to 266 in the week to June 19, according to data from energy services firm Baker Hughes Co. BKR, going back to 1940. U.S. oil rigs fell 10 to 189 this week, their lowest since June 2009, while gas rigs dropped by 3 to 75, their lowest on record according to data going back to 1987. In Canada, the oil and gas rig count fell 4 to an all-time low of 17 this week, according to Baker Hughes. That was 102 rigs, or 86%, below this time last year the prior year.
The situation in Polish coal mines has stabilized after a rapid increase in new coronavirus cases in the past few weeks, Deputy Prime Minister Jacek Sasin said on Friday. Infections among miners have been disproportionately high, according to health ministry figures, or about half of the daily rise in cases in past weeks, while miners accounted for almost 20% of Poland's total reported cases. But in the past few days, new daily cases reported in the Silesia coal region have fallen to below 100 from above 200 earlier, Sasin said. The health ministry reported 352 new COVID-19 cases on Friday, including 91 from Silesia. In total, Poland has 31,316 cases, including 1,334 deaths.
Up next is top news in the agricultural sector.
Russia's grain exports will not be subjected to any quotas from July to December, the Agriculture Ministry said on Tuesday, citing its initial plan. The ministry, however, said it plans to impose grain export quotas in the second half of the season, which runs from January to June 2021, in order to ensure that the domestic market is adequately supplied. Russia, the world's biggest wheat exporter, had set a quota for grain exports of 7 million tons for April through June following an outbreak of the novel coronavirus which has so far infected more than 500,000 people in the country.
We will now look at agricultural price moves.
Chicago soybean futures gained on Friday as U.S. trade talks with China continued, invigorating hopes the top soybean importer would reach earlier export estimates. Wheat fell as the U.S. winter wheat harvest progressed, while corn inched higher on technical positioning. The most active soybean futures on the Chicago Board of Trade SV1 added 3.5 cents to end at $8.76.5 per bushel after reaching $8.80.5, the highest since April 1. Wheat WV1 fell 2.14 cents to $4.81.1 per bushel, up from $4.76, the lowest since September 12, while corn CV1 gained 1.5 cents to $3.32.5 per bushel.
Raw sugar futures on ICE closed higher on Friday, boosted by gains in crude oil and other commodity markets, while Arabica coffee prices eased, weighed down by excess supplies. July raw sugar SBC1 settled up 0.16 cent, or 1.3%, at 12.05 cents per pound, climbing towards a three-month high of 12.27 cents set earlier this month. September Arabica coffee KCC2 settled down 0.85 cent, or 0.9%, at 95.9 cents per pound, after hitting a 9-month low of 94.55 cents on Monday. September London cocoa LCCC2 settled down £10, or 0.6%, to £1,690 per tonne, ending a rebound seen in the last sessions since it hit a more than one-year low of £1,663 earlier this week.
Malaysian palm oil futures surged 4.6% on Friday to their highest close in more than 3 months, boosted by market talks of a surge in June exports so far and higher crude oil prices. The benchmark palm oil contract FCPOC3 for September delivery on the Bursa Malaysia Derivatives Exchange closed at 2,475 ringgit $580.03, its highest since March 6. The contract gained 3.8% for the week, its sixth straight weekly gain.
Moving on to the price moves in the energy sector.
Oil prices rose on Friday but pulled back sharply from early highs on concerns that continued spread of the novel coronavirus could stall the United States' economic rebound. Crude benchmarks followed other assets lower, pulling back from session highs after Boston Federal Reserve President Eric Rosengren said more fiscal and monetary support for the U.S. economy will likely be needed. Brent crude LCOC1 settled up 68 cents a barrel at $42.19. U.S. crude CLC1 settled at $39.75, up 91 cents. U.S. crude rose 8.7% this week, while Brent is up 9%.
U.S. natural gas futures climbed almost 2% on Friday on forecasts for warmer weather and higher air conditioning demand over the next 2 weeks. Front-month gas futures NGC1 rose 3.1 cents, or 1.9%, to settle at $1.669 per million British thermal units. For the week, however, the front month lost about 4% after output rebounded earlier this week, putting the contract down for a third week in a row for the first time since January. Refinitiv said production in the lower 48 U.S. states averaged just 87.6 billion cubic feet per day (BCFD) in June, down from a 16-month low of 88.2 BCFD in May and an all-time monthly high of 95.4 BCFD in November. On a daily basis, however, output hit a 1-month high of 88.3 BCFD this week, up from a 19-month low of 85.7 BCFD in late May.
Now we have metal price moves.
Copper inventories in warehouses tracked by the Shanghai Futures Exchange (SHFE) dropped to their lowest level in 17 months on Friday, as Chinese demand continued to recover after coronavirus-led restrictions were lifted. In the week ended June 19, copper stocks in SHFE warehouses dropped 14.2% to 109,969 tons, their lowest since January 18, 2019, exchange data showed. Aluminium stockpiles fell 3.9% on week to 238,703 tons, their lowest since January 23. However, the rate of withdrawals was the slowest since April 10.
Now, we will look into the most recent news on the USD index.
Fears of a second wave of coronavirus infections have increased demand for safe haven assets, driving the US dollar on Friday to its best weekly gain in a month. Markets this week have been focused on an uptick in coronavirus cases in many U.S. states, as well as new infections detected in Beijing, raising fears of a return to global lockdowns. The world's reserve currency, which made small advances in the North American session, gained 0.54% this week against a basket of currencies equals United States dollars, its best performance since mid-May.
Finally, we have updates on important economic news.
EU leaders agreed on Friday that urgent action was needed to haul their coronavirus-hit economies from the deepest recession since World War II, but made no progress on a massive stimulus plan that has divided them bitterly for weeks. Earlier, European Central Bank Chief Christine Lagarde warned the leaders that the European Union's economy was in a dramatic fall due to the coronavirus crisis and that the full impact on unemployment rates was yet to come. Under discussion is the EU's 2021-27 budget of about €1.1 trillion, and a proposal by the Commission, the bloc's executive, to borrow €750 billion from the market for a new recovery fund that would help revive economies hardest hit by coronavirus, notably Italy and Spain.
That is all for this week's recap. Stay tuned to TradeFlow TV as we continue to provide you with daily updates on the commodity market. You can also follow us on Twitter at TradeFlowTV1 to receive information from there.